Hi everyone. Welcome back to AI Finance Buddy, your friendly guide to mastering personal finance. We make finance simple, fun, and accessible for everyone, whether you're saving for a goal, staying updated on market trends, or looking for smart ways to grow your money. Here, you'll find the latest financial news explained, practical tips to manage your budget, and easy to follow trading suggestions. We also believe in empowering you with financial education, offering quick lessons and relatable examples to help you understand how money works. Also, this episode includes an inspiring real-life success story to show you how others have achieved financial freedom. Let's dive into today's highlights and take the next step on your financial journey together. Chapter 1, Today's Market News. NVIDIA's stock took a nosedive, dropping 17% in one day. That's like losing a huge chunk of your allowance all at once. This drop caused a ripple effect, wiping out $1 trillion from the US stock market. Investors are now worried if tech companies are really worth all that money. It's like thinking your favorite video game is super cool, but then realizing it's not as fun as you thought. For NVIDIA, specialized in GPUs, AI computing, cloud, and autonomous tech, while it faces significant short-term challenges after a historic drop in stock value, its long-term potential in the AI sector remains strong. This could be a good opportunity for investors who believe in its future growth. The score is 65 out of 100. Get ready for some exciting news on January 30, 2025. Thermo Fisher, Dover, and Caterpillar are all set to share their earnings. Think of it like report cards for companies. Everyone expects them to do well, even though they've faced some tough challenges. If they ace their tests, it could boost investor confidence, like getting a high score on a tough exam. For Thermo Fisher, biotechnology and lab equipment leader, it is a strong player in the medical instrument sector, consistently exceeding expectations and showing resilience. With upcoming earnings likely to reflect continued growth, it remains a solid investment choice for long-term growth. The score is 85 out of 100. General Motors, specialized in automotive manufacturing, electric vehicles, and mobility solutions, just announced they expect to make more money in 2025 than people thought. It's like when you surprise your friends with a great birthday party plan. But here's the twist, their stock still dropped by 4%. It's like everyone was excited about the party, but then some friends decided they'd rather stay home. Investors are a bit skeptical, even with the good news. For GM, it is showing strong potential for growth with a solid earnings outlook and strategic adjustments in key markets. However, recent share price declines suggest some market skepticism. This could be a good opportunity for long-term investors to consider entering at a lower price. The score is 75 out of 100. Overall, the market is experiencing mixed signals as some companies show promising growth potential while others face skepticism, leading to both opportunities and challenges for investors. Chapter 2, Simple Finance Terms Explained. Limit order. This is an order to buy or sell a stock at a specific price or better, rather than just the current market price. Cryptocurrency. This is digital money, like Bitcoin, that exists online and isn't controlled by any government. Derivative. A contract that gets its value from something else, like a stock or commodity. Think of it as a side bet on the value of that item. Hedge fund. A private investment fund that uses various strategies, including risky ones, to try to make big profits. NFT. A non-fungible token is a unique digital item, like art or collectibles, that you can buy or sell online. Chapter 3, Top Stock Pick of the Day. Today, let's talk about why Nextracker Incorporated, specialized in solar tracking systems and renewable energy solutions, could be a smart investment choice. First off, NXT is in a strong financial position. It has a very low debt level, which means it doesn't owe much money compared to what it owns. This is great because it shows the company can handle its debts easily. Plus, it's making a lot of profit, with a high return on equity, which means it's good at turning investments into earnings. NXT also generates solid cash flow, which is important for paying bills and investing in growth. Its stock price seems reasonable compared to its earnings, suggesting it might be a bargain right now. And with a good current ratio, NXT is well prepared to deal with any short-term challenges. However, keep in mind that like any investment, NXT isn't without risks. Changes in the economy, competition in its sector, or shifts in consumer preferences could impact its performance. Overall, NXT looks promising for the next year or so, but always do your research and consider the risks. Chapter 4, Core Long-Term Strategy with ETF. Imagine you want to invest in a whole garden of flowers, not just one type. ETFs, or exchange-traded funds, are like a beautiful bouquet that lets you own a mix of stocks all at once, making investing simpler and less risky for the long haul. One popular option is the MSCI World Index, which acts like a global map of the best flowers from different countries. It helps you spread your investments across various markets, aiming for better growth and stability over time. Let's dive into the MSCI World Index. Think of it as a big basket filled with stocks from companies all around the world, primarily from developed countries. It gives investors a snapshot of how these companies are performing overall. Right now, you can check out live updates on the MSCI World Index to see its current performance. There are also exciting investment options like the iShares MSCI Equi Low Carbon Target ETF, which focuses on companies with lower carbon footprints, perfect for those interested in sustainable investing. And don't forget the Amundi MSCI World ETF, which provides insights into its performance and the companies it includes. It's like having a mini portfolio of global stocks without the hassle of picking each one yourself. So, if you're looking to dip your toes into investing, these options are a fantastic place to start. Just a quick note, investing has risks. Stay patient and think ahead, and don't put in money you might need in a pinch. Chapter 5, Quick Financial Lesson. When it comes to investing, low turnover is a term you might hear often. But what does it mean, and why is it beneficial? Simply put, turnover refers to how often you buy and sell investments in your portfolio. Low turnover means you're holding onto your investments for a longer time. One of the biggest advantages of low turnover is that it can lead to fewer taxes. When you sell an investment, you may have to pay capital gains tax on any profit you made. If you frequently buy and sell, you could end up with a hefty tax bill. However, if you hold onto your investments for a longer period, you might qualify for lower long-term capital gains rates, which can save you money. Let's say you invest in a solid company and decide to hold onto those shares for several years. Over time, the company grows, and so does your investment. Because you didn't sell, you avoid those pesky taxes and can enjoy the full benefits of your investment's growth. Another perk of low turnover is fewer headaches. Constantly buying and selling can be stressful and time-consuming. By sticking with your investments, you can relax and let them grow without worrying about market fluctuations. As a tip, consider adopting a buy and hold strategy. Focus on quality investments and give them time to flourish. This way, you can enjoy the benefits of low turnover while keeping your financial journey smooth and stress-free. Chapter 6, Real Stories of Financial Success. Meet Earl Crawley, a parking attendant from Baltimore, Maryland, who proved that smart investing and discipline can lead to financial success, even on a modest income. Born in 1943, Earl worked for 44 years as a parking lot attendant in downtown Baltimore, never earning more than $12 per hour. Yet, through careful saving and investing, he built a stock portfolio worth over $500,000. His journey began in his teen years, working at fruit stalls and learning the importance of saving. Later, in the 1970s, he started investing $25 per month into mutual funds. As his knowledge grew, he bought blue-chip stocks like IBM and Coca-Cola, reinvesting dividends to maximize compound interest. Despite financial struggles, including raising 3 children on a limited income, Earl remained committed to his investment plan. Working in Baltimore's financial district allowed him to learn directly from brokers and bankers, helping him refine his strategy. By the time he retired in the 2000s, Earl had built a debt-free life, with a fully paid-off home and a substantial investment portfolio. Today, he shares his knowledge by gifting stocks and teaching others about financial literacy, proving that wealth is possible for anyone with patience and smart financial habits. Chapter 7, Summary and Personal Investment Strategy. As we wrap up today's video, let's quickly recap the key points we covered. First, we discussed the recent news surrounding NVIDIA, which has taken a significant dive in the market. This highlights the importance of staying informed about market trends and understanding how they can impact your investments. We also touched on the concept of a limit order, which allows you to buy or sell stocks at a specific price or better, providing you with more control over your trades. Next, we explored why NXT could be a smart investment choice right now. With its strong fundamentals, it's worth considering for your portfolio. We also introduced the idea of ETFs, likening them to a garden where you can invest in a variety of stocks rather than just one, which can help diversify your risk. In our finance lesson, we discussed the term low turnover, emphasizing its significance in maintaining a stable investment strategy. We also shared the inspiring story of Earl Crawley, who turned a modest income into financial success through disciplined investing. Now, for my personal investment strategy, I'm adding $15 to my MSCI World Index investment and experimenting with $10 in a fractional share of our suggested best buy pick, NXT, both with 101 leverage. This approach underscores the importance of cautious and diversified investing. Remember, always do your research, test your strategies, and consult a financial advisor when needed. If you found today's content helpful, please like, comment, and subscribe. Your engagement helps us reach more people and ensures you don't miss out on future episodes filled with practical financial tips tailored to your journey. We'd love to hear your thoughts or suggestions for future topics in the comments below. Your input not only shapes our content but also helps build a stronger community where we can all learn and grow together. Thank you for joining me today, and I look forward to seeing you in the next episode.